Do you want to have an intraday breakout trading system that has been working since 2012? Well, stick around and I will show you a modern approach to trading breakout systems. And of course, I'm going to give you the code for free. Hello, I'm Jess Swanson, and I have over 2 decades of experience with the futures markets. And I'm going to share with you my journey and help you become a successful algorithmic trader. This is the second video in a series of breakouts trading strategy videos, and let's get started. Today, we're going to dive into powerful breakout trading systems, and we're going to take a look at one specifically made for the futures market. We're going to explore the logic behind this strategy, the rules, and how you can implement it today. The strategy is called Better Breakout, and it's designed for the S&P E-mini Futures market. The performance of this strategy looks great going back to 1987. The original rules described for this strategy can be found in Futures Truth magazine, and that goes back to 2012, and it was written by Murray Ruggiero. The article was called Better Breakouts in the Electronic Age. I say it was because this magazine no longer exists, and I'm not sure if you can find a copy. However, I wrote an article about it called Better Breakout Trading Model, and that can be found on my website today. Now, the main article point, the original article, was about breakout strategies in the electronic age. Now, back then, many breakout strategies typically used the 8:30 Central Time opening as a key price level for determining when to go long or short. However, the author of the original article, Murray Ruggiero, suggested that the near 24-hour access of the futures market diminishes the significance of that opening time. So Murray created a breakout trading system with a little twist. Now, before we look at that strategy, who the heck is Murray Ruggiero anyway? Well, Murray Ruggiero is a pioneering figure in algorithmic and quantified trading. He's well known for his expertise in using advanced technologies like machine learning and intermarket analysis to help him build trading systems. He has spent decades refining data-driven approaches and written many articles and books on that topic that have been immensely helpful to many people, including me. Now, unfortunately, Murray Ruggiero passed away a couple years ago, but you can still find his work in many of his books and articles. I think he may be best known for his intermarket analysis and seasonality patterns. So, thanks Murray for all the information, and now let's take a look at Murray's system and how it can help us improve a typical breakout system.
Now here's the interesting part. Instead of relying on the traditional opening range, we're going to use yesterday's price action to set our breakpoints. Let's say that this bar is yesterday's price action. So yesterday we had an opening price, we had a higher price, we had a lower price, and we also, of course, had a closing price. Now, this bar here represents yesterday's price action. We're going to use this information to build our breakout levels. Specifically, we can calculate offsets based upon the difference between yesterday's close and its higher low. The larger of these two values is averaged over 3 days to create a dynamic breakout range. I know it sounds a little confusing, but it's actually really simple. So the process looks something like this. We're going to compute an offset called a high offset. This high offset is quite simply the difference between the high and the close. We're also going to calculate something called the low offset, and this is going to be the close minus the low. Pretty straightforward, right? So we have two values. They're all referencing the close. Basically, we want to know what is the distance from the close. So on the high offset, it's the high minus the close, and the low offset, it's the close minus the low. And then what we're going to do is take the biggest one. And in this particular case, we could see that the close it closed rather high, up close to the high. So if you look at the difference between the high and the close, it's just a small value. So we're going to take the other one, which is the close minus the low. You can see that's a much bigger size. So we're going to take the biggest one, and then we're going to store that in a variable, and we're going to compute the 3-day average of that. So over the last 3 days, we're going to compute the high offset, the low offset, take the biggest one, whichever that is, and we're going to simply calculate the 3-day average of that value. And we're going to store that in a variable called max offset average. Pretty simple, pretty straightforward. What this does is this gives us a more adaptive breakout level that reflects the recent market conditions. It's less dependent on the arbitrary opening price and more aligned with the current volatility. So you can imagine as the bar sizes expand and these distances grow, we can see that our offset is expanding. And what we're really doing is taking into account yesterday's price action. The logic behind this approach is to account for significant price movements from the previous day, both the highs and the lows relative to the close. And then we just simply smooth out those anomalies by averaging the price over 3 days. Now here is the easy language, right? This is the TradeStation logic behind it. Now if you don't know TradeStation, please stick through this. It's not too bad. If you really don't know EasyLanguage, I would highly recommend that you do learn it. That is the #1 skill you need to master to become successful as an algorithmic trader. So here is the EasyLanguage code, and we could see exactly what we just did. We have a low offset calculation right up here, and that's taking the distance between the low and the close, and then we have a high offset, which is taking the difference between the high and the close. We store those in low offset and high offset. We can see we're doing an absolute value here. That just means we're going to ignore negative values and just take the positive or the absolute value of these distances. We're going to measure the raw distance between the low and the close and the high and the close. Once we have those values, we put them in this max list calculation. That just says, hey, take the bigger one. Is it the low offset or the high offset? Take that as the biggest one and store that in max offset, and then calculate the 3-day average of those max offset values. So we're going to calculate the low and the high offset for the past 3 days, take the average of them, and that's our max offset average. Now, quite simply, what we do then is we are going to issue a buy at the close of data 2. Now, you'll notice a lot of these have close of data 2, low of data 2. Remember, on the chart that we're trading, it's a 5-minute chart. In TradeStation, going to data 2 means to go to our second data stream, and in this case, that's the daily bar. So what we're going to do with our max offset average is take the close of yesterday, and that's what this is on the close of data 2. That's the close of yesterday. We are going to tack on our max offset average that we just calculated right here, and that's going to be our entry point for our breakout strategy. We can see that we have an if condition here. All that's checking is that we only opened up one or no trades today. So this is just limiting us, forcing us to only take one trade per day. Really simple here, only a few lines of code. Next, we're going to have our exit condition. So when we reach our close time, that's going to be the close of our regular session. I believe if I remember correctly, that's going to be 1500 Central Time. And we're just going to get out at the next bar. We also have a stop loss calculation. Now we're going to use the max offset average and divide it by 2, and we're going to multiply it by the big point value. The big point value for the ES market is $50. So what we're doing is taking a price and converting it to dollars, because that's how the set stop loss works. So this will be like $500 or $1,000. It's going to be changing dynamically based upon the market conditions. It's going to turn this into a price, and that's going to be our stop loss. Now, there's one other thing I want to add. You can see that I am going to put in a momentum filter calculation. The original article written by Murray Ruggiero. And you can see that calculation here, V momentum. And what we are filling this with is we're looking at data 2, so the daily price, and we just have a simple moving average. We're taking the closing price minus a simple moving average. This is giving us a momentum, and we're actually looking for, you can see we had to put this condition here in the buy. We're looking for momentum that is falling. It's below 0. This makes sense. In general, the ES market works really well by buying pullbacks into a strong market. And so what we're doing here is when the closing price is below a moving average, and in this case it's a simple 40-day moving average, when that price falls below that, then we're going to start looking for setups and looking for that breakout. Really simple code. These are all the lines of code that are really required to make this strategy execute. And you can see that it is not much at all. All right, so here is how we're going to set up our chart. It's going to be from 8:30 to 1500 Central Time. We are going to close all trades at the end of the day. So if we don't hit our stop, all trades will be closed. And we're only going to be doing a long only, and we're trading a 5-minute chart. So with that, let's go to TradeStation and see what this looks like. Here we are in TradeStation, and I have the ES market, so the S&P 500 futures market, on a 5-minute chart. You can see here in this window, I have a $2.50 commission fee and as well as a $12.50 slippage requirement here. So we're taking into account slippage and commission on this chart. We can also take a look at, we're going back to 2012 all the way up to the current day of this recording, which is early October of 2024. We can see the session opens up at 8:30 Central Time and then closes at 15:15. Let's enable the strategy. Here's the Better Breakout system, and we can see the most current trade over here was actually a losing trade. Let's take a look and see what that looks like. Looks like price broke out. We have a huge gap up on this day. This was on September 26th of 2024, and it immediately broke up with this huge gap, and price then fell, and we actually got stopped out on that one. Here's an example of a winning trade. Again, we had a gap up, we got in and closed at the end of the day. Here is an example of a large winner. Price meandered around here early in the morning, then broke out at around 11 a.m. and we rode that trend. So what does the performance report look like? Performance report looks like this. Here is what the equity curve looks like, and we can see we have a nice equity curve rising up. It's been choppy as of late. It did make a new equity high at the end, or really I should say right there at the beginning. I know that's probably hard to see, but that is early 2024 and has been in drawdown since. The performance metrics look like this. About $35,000 in profit. We're averaging $181 per trade. That is with slippage and commissions, and we have 191 trades. So this basic premise really holds pretty well. Again, remember, this was built and designed in 2012. And how many years has it made money? It made money in all years except 2013, and 2024 looks like it's going to be a losing year as well. So this is the basic premise of this. This strategy has continued to work really well, but can we improve on this? Let's go back to the slides and take a look. So here I just duplicated the chart and I changed it to NQ. We have NQ on data 1 at a 5-minute, and we also have it on data 2, but we're using 1440 minutes on that bar. Now let's see the performance report. Here is the annual returns, which looks similar in the sense that we have a losing year early on, and 2024 isn't doing so hot, but it's not nearly as in drawdown as the original chart. If we take a look at the equity graph, wow, I think that looks a lot better. That looks significantly better. And we can see here the actual equity high happened as late as August 15 of 2024, and now it is in drawdown. Performance report looks like this. We're at $59,000, just shy of $60,000, and we have bumped up our average profit per trade at 308. Just for comparison, here is the original chart right here, and this one off on the far left side is NQ with the 1440 minute on daily on data 2. So here is the original performance report. You can see we're averaging $181 per trade. If we bump this over to the more to the NQ market, we can see that jumps up to 308. And let's take a look at the equity curve. So here it is on the NASDAQ, and then let's flip over. Here it is on an ES. I'll go back and forth. NQ and ES. Looks really sharp. You know, that's what's great about algorithmic trading. You can start to tinker around with different settings and try different ideas. In fact, I highly encourage that. Let's actually go over here. Let me show you one quick thing that I'm just going to do this on the fly. When you look at the code here, you can see that it's using this momentum filter. Well, what would that look like if we removed that? I'm just going to go ahead and remove that momentum filter. And I'm going to take it out here. And before I go back, remember what this looked like. So here is the performance report here without it. I'm going to take a quick snapshot, bring that up, compile this with removing the filter, and here's our new results. So we can see the new results over here compared to what it was with the filter. We're making more money. We have more trades. Look at this, 627 trades, and this other one had 193. So we could say about 200 trades versus 600 trades. Now notice what that filter did. That filter removed a lot of trades, but it removed the more unproductive trades because we're averaging $308 per trade, where over here we're averaging 108. We can see that in the profit factor as well. It's 1.63 versus 1.88 over here. So we're making more trades, we're making more money, but at a sacrifice of efficiency. We're actually making more money, and if that's important to you, you may be interested in taking out that filter and trading that. Or if you prefer more efficiency, you'd probably want to stick to the original rules. But of course, this is also a great point in, hey, we don't have to just use this momentum. We could go through and test other ideas for momentum, maybe an ADX filter, maybe an exponential moving average, an RSI that's really endless. And when you know EasyLanguage, you could go in here and test these ideas readily. Let's review some rookie mistakes. And the first one I would have to say is not trying different markets. A common mistake is sticking to the S&P market. You're building a system for the S&P, and that's just what you stay on. But notice we built something for the ES market, but we actually moved it over to the NQ, and it did better. So be sure to check out different markets, particularly similar markets to the ones you're working on. This works best with the stock index markets. Pitfall number 2, not trying different time frames. Look, we moved from a daily chart to a 1440 minute chart on data 2, and that gave us better performance. But you could also try other things, right? So our tradable is on a 5-minute chart. What about a 10-minute chart, or a 6-minute chart, or a 15-minute chart? These are all worth testing. So keep these rookie mistakes in mind. In short, in algorithmic trading, it's always a great idea to perform different tests.
Today we covered how to adapt this breakout system by using 2 key changes. The first change was moving to the NQ market. The second one was actually using a 1440 minute chart. Small changes, but as you saw, big differences. Now, remember, this code was written in 2012, and it continues to work well. I actually trade several variations of this strategy in my live account today. You can download this code that I covered today. See the description below this video for more details. Now, if you found these tips helpful, please comment and like and subscribe. It really helps me out. I really appreciate it, and I promise to get back to your comment. We'll see you next time. Take care.
Join me and other EasyLanguage users over at EasyLanguage Mastery, where you can download free sample code, discover great trading ideas, and learn how to become a successful trader using EasyLanguage.